Being able to control your emotions is one of the most important parts of becoming a successful forex trader. When it comes to trading, there are three main emotions which all successful traders are able to control. The first is hope and the get-rich-quick schemes which may have potentially brought you into the industry. The second is fear and the fear of losing money. And the third is greed and being able to cut your losses short. Today we'll be discussing how you can take control of your emotions and become a successfully profitable forex trader. What is going on, guys? It's Thomas here, and today we'll be discussing how you can start trading without the effects of emotion having a hindrance on your trading ability. Today we'll be discussing a lot about trading psychology and the importance of trading psychology and your ability to become a successful trader. Now, trading psychology is basically one of the most important parts that you'll need to conquer on your journey to becoming a successful trader. Being able to control your emotions and start to trade without emotions having an effect on your trading is essential in becoming profitable. This will allow you to be able to have the control and the ability to let your profits run alongside cutting your losses short. Now, the ability to control your emotions in trading will come with time. You will learn it as you start to trade live and start to learn how to manage money. However, laying a solid platform and having a great trading education and trading system in place will help you in conquering your emotions faster. Alrighty guys, so now we'll discuss the three main emotions that you'll need to learn to control when trading Forex. If you do enjoy the video, please make sure you destroy the like button below, hit that subscribe and notification bell, and we'll get cracking on to our three main emotions in trading. Now, the first of these three emotions is hope. Now, hope is the feeling when you come into the trading industry and you're brought in by the get-rich-quick schemes and you're hoping to make a quick buck. Now, like I always say, the Forex market is known as the wild, wild west of the trading industry, and that is because there are so many trading gurus out there trying to sell the dream, driving around in Lamborghinis and trying to tell you that Forex is extremely easy and extremely easy to make money fast. Now, this isn't the case, and what you'll find is that traders will come into the industry with this level of hope, and then when they understand the amount of effort it takes to become a consistently profitable trader and the matter of fact of how much capital is actually required to be able to afford a Ferrari or a Lamborghini in the first place, this level of hope does need to be negated. That way you can become a consistently profitable trader and focus on the foundations of actually educating yourself in how to trade the markets. Now, this is probably the easiest of the three emotions to conquer. It is one that kind of you'll conquer before actually trading live, and that's because if you do come in an industry and are just trading to try to make money fast, you're going to be squashed out of the industry pretty quickly. You're going to become bored with trading once you understand the effort that it requires to actually become a consistently profitable trader. However, those that actually have a passion in trading and enjoy the process and enjoy learning more about the markets, the feeling of hope will be squashed pretty quickly, and you'll be able to move on into actually focusing on your trading psychology and the other emotions we talk about later. Now, I won't lie either, the feeling of making a quick buck and the get-rich-quick schemes is probably what drew me into the industry in the first place. The matter of that you actually don't need much money to start. You can start a trading account with a small amount of money, and these gurus try and tell you that you can turn this $500 account into $1 million in a matter of no time. And the extreme leverage in the Forex industry, this is what pretty much brought me into trading in the first place. However, once I understood what it requires to actually become a profitable trader and the effort and the time that is needed to be able to master your skills in trading, I fell in love with the industry. I fell in love with the process and the fact that the ability to be able to trade can never be mastered. You can never master the markets. The markets are always adapting and changing, and it's just a journey to become better in yourself and to learn more about how you can make more profits out of the market. However, if you are new in the industry, you do need to understand that these trading gurus are just using marketing tactics to be able to take your money and obviously sell you a course, and then the actual profits that they make from that course is what's affording the lifestyle which they're showing in the videos. Hope still does affect your live trading as well, and it comes in the form of people hoping hoping that the markets will turn when the markets are actually against them. And this is why I recommend that every trade you take would need to have a stop loss in place, and that way you have a point in the market when you know this is the level which I'll be exiting the trade. However, a lot of people will refuse to put a stop loss in place, and if the market turns against them, they'll be hoping and praying that the market will change and change to the other direction. However, this isn't the right way to be trading. You should be following your rules, and your rules should have a stop loss in place for every single trade that you're involved in. Alrighty, so the second emotion which we'll need to conquer is greed. Now, greed affects your trading through the inability to be able to exit the market at profits. Again, people come into the industry thinking that they can make money fast. However, once you break down the actual numbers required to be able to make these sums of money, to be able to afford things like Lamborghinis and nice cars, it is quite a large amount of capital required to actually get to this level. I'll quickly break it down for you anyway. So a great trader would make anywhere between 3 to 4% a month. Now this is a quite large return and a level that you should be focusing towards reaching. So if we annualize this to around a 40% return per year. So we've got a 40% return, and if we look at the average wage in Australia, for instance, it's 80,000 Australian dollars per year. So if we use the 40% return and the average wage, you're gonna have to be trading an account size of over $200,000 just to make average wage. Now this isn't going to be taken into consideration increasing in account sizing alongside the fact that you're not always going to be making money. During this process, you are going to be in drawdowns, and obviously you're not going to be making an income every single week just like you would in a normal job. And greed also comes in the form of not being able to remove yourself from profitable trades at the right time. You should always have an understanding of the levels which you'll be looking for to remove yourself from profitable trades, and don't continue to let these trades run and then eventually turn against you and lose your profits. So this comes through your understanding of what's called maximum favorable excursion. So when you're backtesting, maximum favorable excursion means the amount which the typical trade will move from your entry point up to the highest point before turning. So by understanding your maximum favorable excursion and understanding exactly when you should be exiting trades in the green, this will assist in maximizing your profits and not being too greedy and pushing for too high profit levels when you understand that typically there is a certain level which you'll be looking to exit the market. And the third emotion which you'll need to understand how to conquer is fear. Now this is probably the most important emotion of the three, and fear comes from live trading and not letting your trades play out to their entirety. So what I mean by this is that obviously you've got your trading plan in place and your trading system and the rules of that system. And the fear comes in when you've got a live trade on the market and you know you're 10 pips short of your profits, and you go, you know what, I'm already at a profit, let's just exit the market now. And you know, in that trade the market may have shifted and gone down, and then you say, oh perfect, you know, I've made profits when I wasn't supposed to. However, the next time you go and do this, you know, it might be 12 pips from your target, and then you go, oh, you know what, last time the market shifted, let's just take profits now and lock in some profits. And then, you know, that trade might actually go up in the other direction and you've lost out in 12 pips. And then maybe next time you go, oh, let's lock in 14 pips. And then you see the pattern, eventually you're gonna keep taking your trades shorter and shorter and not letting your winning trades ride. And this is why it's extremely important to backtest. So backtesting will help in creating confidence around your system. If you spent the hours backtesting and you have complete understanding of how your system works, then you'll have a lot more confidence in letting those profits ride and understanding, you know what, typically when the price is at this level and we're 12 pips short, a lot of the time it actually will go on to hit targets. So let's just sit out of this one and let the trade play out as per my trading rules. And this is why I typically don't ever recommend people using a signal service. So a signal service is basically when traders will piggyback off a head trader and just follow on any trades which this head trader is getting involved in. Now, whatever happens if the head trader goes into a drawdown, you don't understand the actual drawdown levels which this system has. And you know, if you're taking 3 or 4 losses in a row, you might just say, oh, stuff this, let's get out and find another system. However, you know, this particular trader might understand that, you know, I have had drawdowns in the past which have been 8 to 10 trades, and therefore this is just a drawdown within a system. It's a typical drawdown. However, you've moved on to another system and the profitable trader has continued to make more profits and you've lost out on those profits. So this is why you should always backtest your systems. Therefore, you have complete confidence in your trading system and to be able to sit through your drawdowns as well as letting these profits run. Because what most traders do is becomes basically a curve. So what you typically find is that the trade is continuing up towards your targets and greed kicks in and you're trying to make more profits. and then the trade will turn to the downsides and you're in your losses and in the red, and the fear kicks in and you'll cut your trade short, and then the trade will continue up and hit those original targets which you were going for. So they're the main three emotions which will come into play during your trading journey. So now we'll discuss my 3 tips into how to be able to control these emotions. So the first one's pretty simple. It is to be disciplined. Now, a successful trader is a disciplined trader. They always follow their rules, they always have a stop loss in place, and they always make sure that each trade they enter into is what we call one good trade. Now, a good trade is defined as a trade which is a part of your trading system. It's a trade which meets all your trading rules. Now, this is defined by Mark Bellafiore in his fantastic book, One Good Trade. I've linked it down below. But one good trade means a trade which follows your rules. And to become a consistently profitable trader is very simple. You just need to keep entering one good trade after one good trade. Now, a good trade may be a loser, it may be a winner, but it's a trade that follows your rules. And if your trading system has a positive expectancy, then whether it's a loser or a winner, doesn't matter. That system is going to continue to make profits in the future. Tip number 2 is to learn to manage your risk. Now, what we find a lot of traders will do is risk too much on an individual trade. So they'll go in and over leverage themselves on a single trade, and then if that trade becomes a loser, then you've wiped out the majority of your account. Now, I always recommend to take a maximum of 2% on any single trade. Now, this means that you'd have to take 50 losing trades in a row to lose all of your money. So 2% is the magic number when it comes to a risk on a particular trade. I don't always take 2% trades, it just depends on the trade, but the maximum I will ever take on an individual trade will be 2%. And tip number 3, I can't stress this enough, is to backtest and demo trade prior to trading live. So I've always honed on about backtesting and the importance of backtesting, but it is essential in you becoming a profitable trader and in being able to control these emotions. And on top of this, make sure you do some demo trading before you go and put your live money on the market. That way, again, you can create more confidence in your trading abilities in that particular system and understand how that system performs live trading. Demo trading gives you a taste of how it feels to trade live, how it feels to see a losing trade and a winning trade in place. And when you demo trade, you typically aren't involved in any emotions. So because it's not real money, you don't feel the greed and the fear. It's just paper trading. So therefore, it's important to demo trade prior to understand how it feels to trade without emotion. And I would typically recommend to trade every system 3 to 6 months in a demo account prior to putting live money on the market. So that's it, guys. There's the 3 main emotions you need to learn to control when trading, and my 3 tips into how to manage and control these emotions. Now, the matter of fact is that trading should be enjoyable. You should be passionate about trading if you are a trader. It shouldn't be something that you're coming into just trying to make a quick bang for your buck. Trading should be a passion. It is a passion of mine, and if you are going to be profitable, it needs to be a passion of yours as well. But most of all, trading should be fun. Like any job that you enjoy, it should be something that you enjoy to do, something that you look forward to every day. And if you are looking forward to it and you are having fun, most of the time these emotions won't have an effect on your trading ability. So thank you so much for tuning in, guys. If you did enjoy the video, make sure you smash the like button down below, hit that subscribe button. Thank you again for tuning in, and I look forward to seeing you next time.